So Upstart stock has been on a tear in the last month. As you see here in the chart, it's up 126.3% in the last month, which has a lot of people talking about Upstart stock. What I'm going to do in this video is talk about the reason why Upstart stock is up 126% and why everyone is talking about that, because there's more details that came out about this reason that caused Upstart stock to rise 126%. So let's get right into those details. And that reason why Upstart stock was soaring, in my opinion, is the fact that Upstart secured $2 billion in committed funding for loans on the platform. Now, that's really important for Upstart because Upstart's business model relies on bringing borrowers and lenders together and for Upstart to take a fee from that transaction. That's where Upstart thrives, when it brings borrowers and lenders together and it takes a fee from the transaction, similar to what eBay does for goods, right? eBay brings together buyers and sellers, and eBay takes a fee for its services, right? For offering the platform, for offering the authenticity guarantees, for offering that large consumer base and all of that, right? And that's a really lucrative model for eBay. If you look at eBay's profit margins, they are through the roof compared to other e-commerce companies like Amazon, right? So that's where Upstart will thrive. But what's been happening in the most recent few quarters for Upstart, as the economy started to enter into a more challenging period, as interest rates rose, as default rates started to rise, as the risk of a recession rose, lenders started to pull back from Upstart's platform. They said, you know what, we don't want to put money to lend to your borrowers on your platform, Upstart, right now, because we're afraid, as lenders, we're afraid that the people we make loans to right now, they're not going to pay us back because the economy is going to get into a recession. Some of those people will lose their jobs, and because they lose their jobs, they won't have the money to pay us back. And so out of precaution, out of safety, we want to take our money off the platform. We don't want to make loans right now. So that had been a significant headwind to Upstart. And the way it was dealing with it was Upstart said, okay, you know what? We'll use our own money to fund some of these loans. We'll take our own money from the balance sheet and we'll become one of the lenders on the platform, funding some of these loans to the borrowers on the platform. So that went away from their most efficient, most economical business model, which is just to operate as a platform. And so that raised the riskiness of the stock, because now Upstart is taking the risks in making those loans, which may or may not be paid back. And so as an investor, investors became more cautious and said, we don't want to invest in that stock. That's now not a platform. It's now funding the loans. It's more of a lender than a platform if it's going to do that. And so when Upstart in the most recent quarter announced that it secured a couple of $1 billion of new funding, that gave a jolt to the stock price. That boosted the stock price higher. And so that's why I think everyone is talking about Upstart stock price. And so we got some more information on that arrangement on May 18th when management updated investors. And so they told us that, yes, you secured those a couple of $1 billion, but what are the details? How did you get that? How did you get those lenders to commit that funding? And so the CFO saying, well, if you're committing that kind of funding forward, you expect a premium on your return versus wherever the market is. So wherever lenders may have been let's say they were going to earn a rate of return of 8% for lending on the Upstart platform, Upstart is offering them a premium to that at 8.8% or 9.2%, whatever it might be, but a little bit higher than the market rate of interest that they would have been able to get. Upstart is offering a premium to that rate in order to get these lenders to commit that lending forward, to say ahead of time that they're willing to lend that money. Secondly, the other area is that Upstart is putting more of a skin in the game. It's promising more of a co-investment or a loss sharing or something like that. And those are two examples of what they're offering to lenders to commit. And so what the loss sharing does is it makes lenders more comfortable, right? If a lender says, Upstart, you put your own money in with our money, then the lender feels more comfortable because they know that Upstart is going to take the steps necessary to reduce the risks that it loses money. And so if the lender loses money, Upstart also loses money, and so the lender is more comfortable because now Upstart is alongside the lender absorbing losses if there are any losses to be absorbed. And so that made these lenders specifically, more comfortable in committing that $2 billion in lending. One, because they're getting a higher rate of return, and two, because Upstart is reducing the risk to some degree by putting its own skin in the game. So that's why I think everyone is talking about Upstart stock right now and why the stock is up over 100% in the last month. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.